Hello and welcome to another video by Black Bear Dog Trading. Today is Tuesday, January 28th, and I want to make a little bit of an intermezzo video here based on what happened on Monday with NVIDIA stock. NVIDIA stock tanked to over 17% and then bounced back a little bit, but is nowhere near yet the $147 per share that it was just about a week ago. And I thought I'd make a video about this, what I think about that, and how you can avoid something like this from happening in the future, and basically lose your hard-earned money. It's all common sense. You don't need to be a market wizard. You don't have to have triple PhDs in statistical analysis. You don't need to be an economics, macro, whatever. All you need is common sense. I have none of these degrees, and I avoided the pitfall that took many by surprise, supposedly, on Monday. First of all, we need to put this in perspective. Number one, NVIDIA in only a year time had a 90% increase. So losing 17% still keeps it with what? 73% increase. So it isn't the end of the world. Number two, in the last 2 years, the stock price of NVIDIA has risen 6 times of what it was 2 years ago. Again, 17% drop isn't the end of the world. Common sense also says markets always recover, and so will NVIDIA. Now, common sense tells you be patient. Don't get in a panic mode. In fact, if anything, this would be an optimum time for you, if you can afford it, to buy actually more NVIDIA shares and add it to your portfolio. That said, personally, I don't own any individual stocks for just that reason. Stocks by themselves, if they drop and my money is in that stock, I lose, and the time it will take for that one stock to bounce back and do better than what it was when I lost, it's going to take a while, if at all. That's the reason why I have funds. Funds are made up of multitude of companies within a specific category, and the chance that this entire fund will collapse is hardly possible, because there's always a company that, despite one company doing bad or losing value, another one will actually increase in value. For example, prime example is Microsoft. While NVIDIA quote-unquote tanked, Microsoft, its AI went up. Meta went up. So there are other opportunities that will kind of balance an index fund out. Again, common sense. Not only that, I want to show you a few things, and I want to share with you what I think about this latest, I call it trend, while it's not a trend, AI thing, or artificial intelligence. First of all, it's been around for a multitude of years, if not decades. It just never took off at the rate it does now. There's a reason for it. Now that more than ever, the world is ready for everything electronic, being auto-controlled, auto-managed, auto-decided. I mean, it's just where we are. I mean, we're having flying cars. We're having drones in the Ukraine, for example, that now can actually shoot and kill people, all by making its own decision, all of them. driven by AI. And as technology advances, so will only AI advance. And that brings us to the next segment, which is common sense will then tell you that NVIDIA is not going to be the only player. And Donald Trump investing $500 billion in AI doesn't guarantee that America will be the only player. We've now seen it. Anyone who thought that America was going to be the only one to control AI, sorry, you made a wrong assumption. I don't care who you are. Common sense doesn't dictate that. Common sense dictates that countries like China, India, Africa, European Union, Russia, those are all countries with a great desire to have a leading part in AI. And as these countries will begin to emerge in that field, guess what's going to happen? Costs will automatically come down. So it's a normal progress, and you need to be aware of that. And it works that way with anything. Name a product, and it went that route. iPhone was incredible. I mean, there was no other phone like it. Then, quote unquote, clones come out. Android, Windows, whatever else is out there. And next thing you know, Apple kind of lost a little bit of ground. Then China started to produce its own type of phones. Apple lost a little bit more ground. And once it all stabilized, once it all kind of settled and people got to accept Apple's that this is just how the world works, Apple kind of gradually went back up again in value. It's the same with what we're seeing right now. And just because DeepSeek all of a sudden managed to create an open source AI model that does learning at a fraction of a cost, what did they say, $6 million versus $500 billion? Yeah, of course, it sends the market in a frenzy. Again, common sense. And that's all you need to use in investment. Keep your eyes and ears open and use common sense. Let me show you something here. If, for example, let me open this up. If, for example, you read right here, Nancy Pelosi sells Apple and NVIDIA stocks and buys Alphabet and Amazon calls the filing show, and she did that, or her husband, what's his name, Paul Pelosi, did that only a week before, quote unquote, it crashed. Pay attention. I'm not saying follow Paul Pelosi because he's a guru in investing. No, but what I am saying, history so far has shown with Pelosi, he seems to be knowing things wherever he gets it from. I'm not turning this in a political video. Wherever he gets it from, he seems to know when something is going to go up and something is going to go down, and he's always been on the front, and he's always profited from it. So when he all of a sudden goes and sells 10,000 shares of NVIDIA stock, pay attention. I'm not saying blindly follow his lead, pay attention. And by the way, it's not on one website where this was posted. Here's another website. There you go. That Nancy Pelosi, it's not really her, she doesn't own it, it's her husband, sell NVIDIA stocks weeks before price drop. And records show he did. You can scroll down, and I don't know if it's the prior article or this article, but it shows, you know, what he sold. I mean, how many shares? It's like 10,000. Not peanuts. Millions of dollars worth. You know, common sense. Number two, in addition to common sense, don't be greedy. And look at the market as a wealth builder, not an overnight success. If you're looking to become really rich With investing, then you need to take a total different approach, and you need to trade your stocks. And even then, you have to have capital at your disposal that you can take full advantage of that. What do I mean with that? For example, in forex trading, it's known as scalping. The same applies to stock trading. In forex trading, they put in millions of dollars, a few pips, boom, they're out, and they made millions of dollars in profit. Same with stock trading. They invest 100,000, 500,000, millions of dollars. Stock goes their way, a few pips, even if they have to hold it a day or two, it goes their direction. They sell, they liquidate, and they made millions of dollars. But that requires capital that most stock investors do not have at their disposal. Now you know part of the reason why the rich get richer, because that's how it works. So don't be greedy. And instead, what you want to do, if you had NVIDIA when it was, I just say something, when was it, 120 or 118, not that long ago, when it reached 147 just a week ago, why don't you liquidate? You roughly made $40 per share. Keep that money, that profit that you made, and the profit that you made, put it away. Put it in your HISA, high yield savings account, where you right now are earning 4.10% interest per year. And if you follow what I am going to show you under Fidelity in my next video, you put it in a tax and local government exempt high yield savings account, you'll make around 5% because it's tax exempt for both the state and the government. So you make some money there too. It's common sense. And last but not least, common sense, patience. Patience. Rome wasn't built in a day, and neither is you becoming wealthy through trading or through investing. It's going to take time. And you just have to have that patience and listen to some people who have walked that road before you and have a clear track record of being super successful at it. Listen to them when they tell you it takes time. And when it goes down, it will go back up, but it takes time, patience, and common sense. You put all that together and you have a winning recipe for making money with investments without the need of spending oodles of hours on research, without the need for knowing everything there is to know about macroeconomics. And I mean, seriously, just a little bit of common sense and it goes a long way. Anyway, that's my rant about what happened there with NVIDIA on Monday, yesterday, and that's what I also firmly believe is how you should invest. That's how I invest. Last but not least, what we saw Monday is going to repeat itself many times over in the future to come. And the reason for that is other countries, as I said in the beginning of the video, will look to make their own mark in AI as well, because they understand the importance of having a portion of AI, because it will allow you to control a portion of the world economy. It's just the way it is. It's the reason why Donald Trump invests or is willing to invest $500 billion in data centers and learning centers and whatnot. And as far as NVIDIA is concerned, they'll bounce back. To what level? Anyone's guess. Fact of the matter is, even DeepSeek uses NVIDIA chips. Don't take my word for it, look it up. So even DeepSeek is buying NVIDIA chips to have their AI system do the learning on, even though they use open source software. Common sense. So that's it. I'm done with my rant about common sense investing. I'll see you tomorrow where we continue with our normal investment videos, phase 2, based on trading Forex. Become a professional trader Forex and trade your way to wealth. And that's it for now. Take care and God bless.